I received an email today. The market is crashing. What should I do? That email made me recall what it's like to trade the market day by day without having a compass and making decisions on pure emotion and adrenaline. It's surely fun while prices are going higher, but it feels horrible when prices are heading lower and your blockfolio is all red. It's a sad, hopeless, frustrating feeling, and we've all been there. Therefore, today's video is all about creating an investing compass of your own so that you can shed the directionless feeling. Let's find ways to gain perspective in dynamic markets so we can better understand the fear created from a falling market and learn to master our trading emotions. Together, let's approach this market with a sense of calmness and stay cool while everyone else is freaking out. Thanks for watching Ready Set Crypto. This is your brain on blockchain. If today's hints of the NASDAQ becoming a cryptocurrency exchange come to fruition, understand that we have the opportunity to be here before institutional investors really start to influence the market direction. With that said, never lose sight of your purpose here. You're in a space well before many of the Wall Street traders are. Sure, the market will change as more professional traders begin to enter it, and certainly it will make things harder as an amateur trader. But you have a big advantage over them. You were here first. So, as I said, today's video is all about creating an investing compass of your own so that you can shed that directionless feeling, that panic when the market is going down. Imagine you got into a car without any instrumentation. How would you know how fast you're going? Which direction? Is your engine going too fast or too slow for the speed and conditions? Or imagine flying without an airspeed and altitude indicator and not knowing when you can deploy your flaps nor how far above the runway you really are. These examples may seem absurd, and sure, you'd never get into a vehicle like that. But this is how most investors are choosing to deploy their capital in the crypto markets. And as I'll stress, this is where charts and technical analysis can really help. Looking at the total crypto market cap, we get a number. But does this really tell us anything? To go back to my vehicle examples, this is like driving a car going 35 miles per hour, but you don't know what direction. The key thing here that we lack is context. And this is where charts can help immensely. So the first question we're going to need to determine if we want to know where we are and where things are going is the trend. And quite honestly, this is where newer investors get confused, as they believe the trend lives on the 1-minute chart. So look to the advice of traders who have been in the market for decades now, like Doc. Doc's #1 rule of price action is that larger timeframes dominate the trend. What this means is that the trend on the monthly chart outranks that on the weekly chart, and the weekly chart outranks the daily chart, which in turn outranks the hourly chart. And the 1-minute chart, who cares about that? Start by looking at the price of your assets from the top down instead of the bottom up. You can see this on the weekly chart of Bitcoin that the trend is still down, lower highs and lower lows. Until this pattern of lower highs and lower lows is broken, we should expect to continue to see strong rallies that get faded lower until the eventual game-changing disbelief rally occurs and the crypto markets emerge like a phoenix from the ashes. It happens without fail when investors give up and stop trying to buy the bottom, which I know sounds kind of oppressive, right? Maybe if you lacked how to apply that rule. And so that brings us to Doc's rule #2, which states that reversals come from the inside out. Within those big weekly swings, we'll see a whole daily trend which is tradable, such as the recent bounce off the bottom that everyone started to FOMO into. So the key takeaway here is that for every currency you want to trade, you should have a longer, broader perspective. You want to use what's known as an anchor chart, such as the weekly chart, which is especially relevant given that many cryptos don't even have months in the market to create a monthly chart. This will show you the overall story of what's happening. And inside those weekly swings, we can trade opportunity, or what's known as swing trading. So for the remaining portion of this video, I want to make a second point that ties in with money management. Do you think there would be a chance that I would have received the "help, the market is crashing" email if there was not some sense of risk or danger associated with the market move? I mean, no one is going to look at CoinMarketCap or a chart and instantly sense danger in price movement, right? How does a red candlestick become threatening by itself? Well, the truth is, it isn't, unless we associate it with danger. And 99 times out of 100, that sense of danger is created by retail investors placing too large of a position with a disproportionate percentage of their account. It's like walking into a casino and betting everything that you have on black at the roulette wheel. Look, it's easy to feel euphoria when things are going your way, like nothing could beat you. Everybody feels like a genius in a bull market. And conversely, it's utter despair when you get it wrong and the market does not agree with your thesis. And if there's one thing that's a constant in the market, it's that your risk capital was hard-earned to begin with. That capital represents hundreds of hours of slaving for the man, delivering pizzas or building houses. You're attached to that capital and you remember every drop of sweat that went into it. And the possibility of losing even 1% of that does not surface as something agreeable. So here you are, participating in one of the hardest games on the planet with money that you're hopelessly attached to, trying to make rational, cold-blooded decisions. Is it any wonder why people get panicked with market moves like yesterday's? So do yourself a favor. Trade positions that are below your risk radar. A good rule of thumb is Doc's golden rule of risk management, which is that no one position should represent more than 2% risk to your account. This business is all about doing the right thing at the right time, and that task is impossible, absolutely impossible, if you have too much of an emotional stake in that decision. So only trade with money you're okay losing. If the market were to go to zero, you wouldn't care because you're trading with risk capital. So by following Doc's golden rule of risk management, by remembering that larger time frames dominate the trend, and by being aware that reversals come from the inside out, you'll start to have an investing compass of your own so that you can shed that directionless feeling, that sense of panic when the market goes down. And that will make you a much better trader. So good luck, and always remember to keep perspective in mind. And that's it for this video. Thank you so much for watching, and please consider subscribing if you haven't done so already in order to continue to see high quality cryptocurrency analysis and advice. Don't forget to hit the bell right next to the subscribe button in order to be notified when we put out a new video. Also be sure to watch some of our other videos and visit our website, where we've got more free cryptocurrency education, a free intro course, a free book, and a free newsletter. So definitely check us out. Thanks again for watching. This has been Ready Set Crypto, and I'll catch you in the next one. Cheers.